Hello everyone, welcome to the Trendline Investor channel. So every weekend I try to post one stock which has the potential to give us some recent returns in the coming weeks or coming months. So in a similar way, this week also I'm doing a stock video which is a 2000 crore market cap stock and which also might participate in the consumption story of India, and it is in the fragrance and the flavor space. But before we get into the stock video itself, I thought I'll give you a short outlook on the Nifty, the MidCap and the small cap index, and tell you, or at least make you aware of where we are in the entire market cycle, and do we have a potential, to crash from here, or do we have potential to go up from here? Okay, so before we do all this, if you haven't subscribed to my channel, do subscribe, and if you haven't liked my video, go ahead and like it, and do share this video with your friends, and share the channel also with your friends and colleagues. So let's not waste more time, and let's get into first the Nifty, small caps and mid cap view for the coming weeks. So this is the Nifty chart, and this week is also the end of the month of April. So I'm looking at the monthly charts as of now, and if you see the monthly charts, we clearly see that every rise has been sold, right? So every time the market tries to go up, there has been selling pressure and the market is coming down. Again, in the month of Jan, we tried to go up, but there was selling pressure and we came down. Again, in the month of April, this month, we again tried to go up, but there was selling pressure and the market came down. But also on the lower side, also we are seeing, demand. So in the month of December, came down, but the market went up again. Again, the same happened in Feb, the same happened in March. And this month, we've had kind of a smaller range compared to the last couple of months. So overall, for me, this market is indecisive. By indecisive, I mean the market is not really sure whether it should go down or whether it should go up, and it's going sideways. Now, so as a matter of fact, what we should do is we mark two levels beyond which, or above which or below which the market will head higher or lower. So on the top side, so I feel that there is a resistance around 18,200 levels, 18,100, 200 levels. So that's the level I'd be watching for if we have to break out and head higher. Okay. On the lower side, I think if we have a monthly close, below 16,500 levels, so that zone, or if we go even, below the levels of this month. So if you look at this zone here, we've had 2 months of doji here and we had a massive breakout in August. So that low of 15,800, right? So 15,800, 15,600 levels. If you go below that, then we are heading even lower, and probably that will mark the end of this up move, and we might go sideways for a few months. Probably we might go down as well. I'm not sure about that, but overall my view is the market is very indecisive and we have not been having some really good setups of late. Stocks go up, but then they tend to come down, so you have to be cautious, and let's not go overboard. Let's not buy stocks with huge quantities. Let's keep our risk in check, and that's how you should be trading in the markets. But also let's take a look at the small caps index, right? So the small cap index itself, I think, has topped as well. So if you see the month of October and then the month of December, we've had a sell-off on the top, and we've had dojis, right? So after that massive move up, we are seeing some pause in the move in the buying, and we had a strong move down in the month of Feb, and since then we've not been able to do anything. And I feel that this was the month of Feb is a retest that we did to the levels, to that resistance zone, and that's a retest, and again we're not able to go up. We've again closed below. So for me, the small cap index itself looks very bearish, and the bearishness, not very bearish but slightly bearish. If it look very bearish if we go below this levels of 9,500 levels. So the levels of 9,200 to 500 is what I'd be looking forward to in the coming weeks and months. And if we close below 9,500 levels on the small cap, then that's definitely a bearish sign, and we might see some stocks even cracking even further. So when it comes to small cap and mid caps, you have to be very selective in picking your stock picks, because small cap and mid caps are very volatile and they can correct 40%, 50%, even 80% to an extent. So be very cautious when it comes to your investing your money, and don't go overboard and buy stocks which are not actually doing well, right? So that's what I would leave as a message for now. Be cautious. Definitely this is not the right time to go big bang and invest all your money in even in a mutual fund. So there would be probably a correction, and if there's a correction, that's a very good opportunity to buy mutual funds, add on to your SIPs, or even buy stocks which are actually good. Okay, so that's the message I'll leave you, and let's look into this week's stock video. So this week we're going to look at a company called H Kelkar. So SH Kelkar actually is in the space of fragrances and flavors. Now, India is a consumption story, and we have a lot of companies like HUL, Nestle involved in manufacturing of biscuits and packaged foods. We have so many different companies in India, and this whole concept of packaged food is gaining traction. And personally, I feel that India is a huge story when it comes to flavors for food, flavors for packaged foods, and also when it comes to fragrances, right? So in fact, after COVID, we've had the sanitizers, soaps, a lot of different products that we used on a day-to-day basis. All these products need fragrances, and I feel that this company SH Kelkar is poised to take advantage of this huge consumption story in the coming years. And today we're going to look at the fundamentals plus the technicals, and we also look at targets. So don't forget to wait till the end of this video so that you know what the targets also have for this stock. Okay, so I'm going to start off with looking at the report, the annual report of SH Kelkar, and I'm just going to give you a few short pointers as to what the company is doing, what are the challenges probably, and what is the outlook for this company, right? So starting off with the outlook for the company itself, this is a huge industry. The flavors and fragrances market itself is poised to grow to USD $10.98 billion during 2024, and that's a 6% CAGR. I will share this link on the description, so do take a look at it. But there are also some challenges for this industry, right? So one of the major challenges for this industry is that the flavors that we want keeps changing constantly. So today we might want a different flavor, and tomorrow we might want a different flavor. So it's very challenging for the company to keep up to the the flavors and demands of the consumers, and that's why this company has a lot of capex involved, and it's very capex driven business, and they have to keep researching, they have to keep producing, and sometimes the flavors just don't move. Sometimes there's not much demand. But the good thing to notice is there are more than 1,000 small, medium, large size enterprises in this industry, both in the organized and unorganized sector, and there is already a lot of consolidation happening. There's SH Kelkar itself is buying a lot of companies, and it's been doing that for the last few years. And overall, the FNF, or the fragrance and flavor industry, is going to grow at a 15% CAGR until 2025. Probably it might even go down a bit in the future, but still a 10 to 15% CAGR for an industry is massive. And remember, SH Kelkar is one of the biggest players in India, and it's in fact the biggest domestic player in India. There are a lot of foreign players, but that gives a very unique advantage to SH Kelkar. Now, the other thing I wanted to highlight is the outlook for the fragrance itself, fragrance segment. There has been a tremendous rise. If you go through these pointers, you see that there has been a strong demand for the personal care, laundry care, and household care products, and that's where the demand is coming. Tissues, candles, baby diapers, all of these products needs fragrances. Without fragrances, we are not really used to using products of late. So that's one of the reasons why this company looks really good. Also, when it comes to the flavors segment, so the flavors required in processed food, snacks, soft drinks, candies, confectionaries, meat, seafood, sauces, condiments. So this is a whole lot of food products that uses flavors. So overall, the growth drivers look fantastic for the fragrance and flavor segment. There's a growth in use of personal care products. There's new categories emerging like stationery, toys, and household care and fabric, where fragrances are used. And also we have a lot of money to spend, right? So there's increasing disposable income, which also is a very good point, because the more money we have, the more we go towards good fragrance products. Obviously, lifestyle also is improving. Whereas in flavors, if you see, there is a demand for unique flavors, exotic flavors, and there are a lot of new flavors emerging in the food oral care segment, and the entire consumer palette is evolving, right? So that evolution that's happening will obviously increase the demand for this. Now, it's a huge industry. As I said, it's a multi-billion dollar industry, and I think we should keep a note of this. Now, one more slide that I want to highlight is the macro highlights, right? So the business the entire fragrance and flavor did face pressure last year because of the travel restrictions, but segments like fabric care, personal wash, all in fact did well because of the hygiene aspect which came in after COVID, right? Otherwise, I think there has been a strong demand from this entire space. Now, one last thing I wanted to highlight is the flavor segment itself. The flavor segment has actually been growing. They've launched a lot of new products in the flavor segment. In fact, they launched a new product during the pandemic, which actually did picked up traction, and they have a lot of natural flavors which are selling on Amazon, Flipkart, which is seeing crazy demand and huge monthly orders. So the e-commerce also is kind of driving the business for this company. So that's from a very fundamental aspect of SH Kelkar. Now I know I've covered this already once before, but now I've done a better analysis and more. I've given you a better view on the fundamental aspects, which might help you increase your conviction in holding this stock, right? So let's also take a look at screener.in, which I always do. So just showing you the annual sales numbers and how the company has been doing. So it's a pretty decent company in the 2000 crore market cap. It has a 2000 crore market cap. ROC is decent. ROE is decent. Stock is trading at 12 P, which is slightly undervalued in my opinion. In fact, a little bit undervalued. It has a lot of cash in its books. And then if you look at the historical PE ratio and the EPS has been rising, but whereas the PE ratio has been almost constant, right? It has not been going up, which shows that while the company has been reporting good profits of late, the earnings, the PE ratio has not done well, which means the stock has not gone up. So that's a very good sign for me, and that's why I call it undervalued, right? So if you look at the annual numbers here, quarterly numbers here, we have gone from 270 crores to almost 400 crores in the last quarter, right? That's a very strong jump in terms of the sales numbers. And while the profit has not done that great, so obviously in the profit we've seen 81 crore high, and now we are seeing a 32 crore profits in this company. So not great, but also not bad from a perspective. The one of the problems that they have is the debt is increasing. I'll come to that shortly, right? So we have also the sales has gone up from the last 10 years, gone up from 300 crores to 1500 crores, right? That's a 5x increase in sales. And also we are going to see one of the highest profits for the financial year 2022. Okay. And just taking a look at the borrowings. Now, this is one aspect that I want to highlight. Now, this company, as I said, has been doing a lot of acquisitions of late. It has bought some companies in Italy. It has bought some companies in Asia. More to grow and grow inorganically as well. And now this companies that they have bought in Netherlands and Italy will help them increase their footprint in Europe, which is actually a high margin business for them in Europe, whereas Asia is not really a high margin business, and they've been taking debt to fund this acquisitions, and that's why they have this debt. But of late, they've clearly stated in their con call in the last month, in the month of February, that they would not do more acquisitions and they would focus on trying to consolidate and bring in synergies within the company itself. So synergies, once they start kicking in, you can see the profits increasing, the gross profits increasing, the operational efficiency might increase, and there could be a lot of efficiencies which kick in. And their plan is also to consolidate and try to reduce the debt. Debt is right now pretty high, and they would also reduce the debt going forward. So that's from a fundamental perspective. Okay, so the company is predominantly held by promoters and FIs have increased stake recently from 7% 9%. Again, DIs have not increased stake. Yeah, that's it from the fundamental perspective. Now, again, so since the markets are not quite doing quite well, I don't want you to go big time in this stock. That's why I want to cover the technicals and tell you from a technical perspective what are the levels that you have to look forward to and what are the levels that you have to buy. Right. So first thing that I want to show you is the monthly chart as always, and I'm going to show you some levels and what the stock is doing. Okay. So from a fundamental perspective, from a technical perspective, the stock has been in a downtrend. Right. So since 2017, the stock has been going down, but of late we've had an inverted head and shoulders breakout in the month of May, and then we've been going sideways for almost 1 year. Right. So the levels of around 135 to 140 is a very strong support zone in my opinion, and we've seen some good demand coming in here. Every time it goes down to that level, we see that the stock comes back again. Now this tightness or the contraction in volatility or contraction in price is actually a very good sign, and I feel that this stock might break out. If the market stabilizes, we might see a good breakout above levels of 167 70 levels. We might see a breakout and the stock might head higher, but for now we are yet to break out from this long downtrend, but we are very close, and this is called a build up when it is just consolidating near a breakout zone, so it might potentially break out and head higher. Okay, so just quickly going into the weekly charts to just show you what's happening here. So we had strong 3 weeks of move up, and then now we're consolidating around the weekly charts. So remember that has been a breakout, inverted head and shoulders breakout, and it is going sideways. Right. So for me, if we break out and head above 167 levels, then definitely it's worth adding more to your portfolio. But if the markets don't do well and if we come to levels of 135, 140 levels, then I would buy more, probably around 2.5% of my portfolio I'll buy, and I'll keep the stock, and above 170 I'll add more 2.5%, probably bring it to 5% once it crosses 170. Okay, so that's the technical outlook for the stock itself. So I'd buy right now probably 2%, 2.5% portfolio. If it comes to 140 levels, I'd buy a little more, or if it goes above 170, I'd buy more of the stock. The stop loss should be 135 levels for this, and if you can keep it on a weekly closing basis, especially if there's volatility, that will be great. But then if you have more than 5%, definitely it should not be weekly closing basis. You should close it as soon as it crosses below 135. If you have anything less than 5%, then I would wait for a weekly closing basis and then take a decision whether I want to close the stock, exit the stock or no. But if you want to hold the stock for the next few years, definitely I think it might be worth holding, but ensure you don't go overboard. Because the fundamentals are good, it's just the technicals are not picking up. Okay, and what are my targets for this stock? So for me, the target is target is 250 levels, which is this zone here. So I'm looking for targets of 200 first, and then probably once we break 200, then I'm looking for targets of 350 also, right? But always, as I say, ride the trend. I'm going to make a special video on how to ride trends, don't forget. So riding trend is how you make big money. Once we cross 350 levels, then we can see even much higher levels going forward. So that's my technical analysis view. Buy at current market price or at 140, we'll stop at 135 levels, and we're looking for targets of 200 and 250 levels, and even much higher if the market is good. We might see even 350 levels going forward. But overall, don't forget, this is a consumption story, and I have conviction in the stock, but always I keep a stop loss and I don't go overboard on a stock. Try to follow that. I'll leave you here. And if you did like this video, don't forget to like and subscribe to my channel. I have more videos coming in the coming days and weeks. So yeah, do stay tuned, and I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye bye.